Ethereum just flashed a signal we haven't seen since March 2020, exactly before a 2,000% surge. In the next 4 minutes, you'll understand why whales are silently accumulating ETH right now, and what on-chain data reveals about the next major price move. But first, there's one number that nobody is talking about. To understand what's happening with Ethereum today, let's look at the facts. Quick timeline. November 2021, Ethereum hit its all-time high at $4,178. June 2022, it crashed down to $880, an 81% collapse. March 2024, the price rebounded to $3,900 following Bitcoin ETF approval. Today, Ethereum is trading around $3,200 to $3,500, and something just shifted. Here are the 3 data points that are catching analysts' attention right now. First, the ETH-BTC ratio just touched a major historical support. Every single time this happened, Ethereum outperformed Bitcoin in the following 90 days. Second, spot Ethereum ETFs in the United States are accumulating an average of 100. Now, let's look at the chart straight in the face. Scenario number 1, the bullish case. Analysts at Standard Chartered are forecasting ETH at $8,000 by the end of 2025. Their reasoning? Spot ETFs will generate structural demand the market has never seen before. If Bitcoin reaches $150,000, historically Ethereum follows with a multiplier ratio of 1.5x to 2x. Scenario number 2, the bearish case. JP Morgan remains more cautious. According to their analysts, DeFi adoption is stalling, and competition from alternative blockchains like Solana and Avalanche is eating into Ethereum's market share. In this scenario, ETH could consolidate between $2,500 and $3,500 for another 6 months. Scenario number 3, the unexpected catalyst. What if the real trigger isn't the price at all, but the Pectra upgrade coming to Ethereum in 2025? This technical update will reduce transaction fees by 80% and double. So, concretely, what do you do with this information? Let's dive into what the data suggests for Ethereum's future. On-chain analysts have identified key accumulation zones for Ethereum. These zones between $2,800 and $3,200 are where the whales are actively buying. Dollar cost averaging, or DCA, remains the least risky strategy in such a volatile market. Always watch the ETH-BTC ratio. It's a leading indicator for Ethereum's next major move. Now, let's talk about what to avoid to protect your investments. Avoid buying on an emotional spike after a rapid pump. This often leads to quick losses. Ignoring risk management is a big mistake. Even in a bull market, ETH can correct 30–40% very fast. Here are 3 critical signals you need to watch closely for future price action. First, monitor the weekly Ethereum ETF volume figures. High volume indicates strong institutional interest. Second, look for a confirmed breakout above the $3,800 resistance level. This is a key technical indicator. Third, pay attention to Federal Reserve interest rate announcements. These impact the entire market. To summarize, Ethereum's fundamentals are solid. Institutional money is coming in, and the Pectra upgrade is on the way. Over the next 30 days, watch the $3,800 level. If ETH closes above it on a weekly candle, the next target is $5,000. Subscribe for real-time alerts on the next move. Hit the bell. The next video covers the altcoins that follow ETH. Stay informed, stay sharp. Thanks for watching. Next video drops in 24 hours.